Hello and welcome to the look ahead for Thursday, the 20th of June, with me, Fiona Cincotta, Senior Market Analyst at City Index. So tomorrow is a big day for central banks. We've got the Swiss National Bank and the Bank of England giving their rate decision. Then over in the US, we have a housing starts, building permits and jobless claims. So Bank of England, interest rate decision tomorrow. It comes after inflation data today cooled to 2% in line with the Bank of England's target. And that's the first time since July 2021 that inflation has been at that level. Down as well from 2.3% year on year in April. However, delving deeper into the numbers, the service sector inflation was actually stronger, hotter than expected at 5.7%, down from 5.9%, but above the 5.5% level expected. Now, service sector inflation is intrinsically linked to wage growth. We saw last week that wage data was also stronger than really expected, around that 6% level. So, the Bank of England is very unlikely to cut interest rates tomorrow, especially when you tie in with the fact that it's also election period. So there has been this blackout period for Bank of England policymakers and limiting the amount that they can communicate. So, but what we could see is the Bank of England teeing the market up for an August rate cut. And I think that would be contingent on the idea that service sector inflation would cool further and wage growth slow. Otherwise, then it would be a September cut that we'll be looking at. So what does all this mean for the pound US dollar? Obviously, let's not forget that it was a public holiday in the US today. So trading in the dollar has been limited, light volumes. But as we can see, the pound US dollar, it fell out of that rising trend channel, dropping to a low of 126.60. It's recovered from that, pushed above 127. We're rising towards 127.30 at the moment. Now, obviously, if we get a slightly more cautious sounding Bank of England who want to wait and see for service sector and wage growth to slow further before cutting interest rates, then we could see the pound rise further towards that 128 level. However, if we hear that Bank of England Governor Andrew Bailey is preparing the market for a August rate cut, then we could see today's gains in the pound come off, and on the downside look for support at that 127 level. That's immediate support. Below that, watch out for 126.60. That was the recent low. And then you've got the 126 round number as well. So other things that we'll be watching out for tomorrow, as I mentioned, we have the jobless claims as well as the housing starts and building permits. Jobless claims, I think, is going to be the most in focus of those three. And that's after we saw that really strong rise last week to a 9-month high in jobless claims, which, after that really strong non-farm payroll report, where we could see that strong bearish engulfing candle that sent the gold price sharply lower. We've seen that the price has been trying to grind higher, supported by optimism that the Federal Reserve may cut rates sooner than expected, than that one warning that they gave for one rate cut in the Fed meeting. Obviously, so weaker than expected jobless claims, stronger than expected, so higher jobless claims could see gold rise, sort of as it would point to a weakening labour market. As far as levels to watch, so we've seen gold recover from that 22.88 level. It's been grinding higher. It's around the 23.30 level at the moment. But, we're still below that falling trend line, still below the 50 SMA. So it does still have a bearish feel to it, this chart. Buyers are going to be looking to get towards 23.45, which is the 50 SMA, before heading towards 23.88, which was the June high. On the downside, be watching out for support at that 22.86, the June low, and below there 22.80, which was that low that we saw in the April time. Below that 50 SMA, sorry, the 100 SMA comes in at 22.40. And just finally, failed to mention, but there is also oil inventories. Tomorrow, we've got the EIA oil inventories. Oil prices have had really quite a strong rally. If we just have a look across the month of June, oil prices fell on the back of OPEC expected to, increase supply later in the year. And we've seen this rise towards the 80, or it's at the 80 level at the moment. The price of $80 the barrel. This rise we've seen on the back of sort of optimism surrounding increased demand if the Federal Reserve start cutting interest rates, as the market expects, sooner rather than later, and also as we see increased escalation in the war in the Middle East, with between Israel and now Hezbollah, sort of tensions are rising. So that could see more countries drawn into that conflict in the Middle East. It could mean more risk of supply being affected. So as far as levels to be watching on the upside, 81.50, that's the May high. Above there, then look out for that 84.50 level. On the downside, immediate support at the 80 level. You've also got the 200 SMA at that 79.50 level, and then below that, sort of around the 77.50 level, there's also some support. I do hope that you've liked what you've been watching, and if you do, then please do give me a like, and if you'd like to see more videos like this, then please do subscribe.